India's largest airports platform as Adani Airports, Adani Digital Data Centers, roads, and primary industry. The issue here is a further public offering of partly paid up equity shares of face value of rupee 1 each by way of fresh issue aggregating to up to 20,000 crores. The company shall raise 50% of the gross proceeds on application, with balance monies being raised in subsequent calls to be made by the company from time to time. The price band for the FPO offer has been fixed from rupees 3112 to rupees 3276 being the upper band per FPO equity share. The retail portion of the offer will be at a discount of rupees 64 per FPO equity shares for retail investors. The offer opens on Friday, January 27th, 2023. The anchor investor bidding date shall be day, one working day prior to the bid offer opening date, as the normal cases. The offer will close on Tuesday, January 31st, 2023. I just want to add here that this group has been created by the promoter over the last 40 years, and one step at a time, just like the heart beats, we have reached out here. I will now hand it over to the moderator and thereafter the management team led by Mr. Robbie Singh, Group CFO, Adani, to take you through the business presentations for this afternoon. Thanks a lot.
Good afternoon, everyone, and thank you for being here. On behalf of Adani family and Adani Enterprise, I just take the opportunity to firstly thank you for your attendance in all the cities. Our team members are there. So post this, if there are any questions, you can please speak to the relevant team members. We have a short presentation to introduce Adani Enterprise and what we intend to do as part of this issue. Just as a brief summary of the group, next please. Just as a brief summary of the group, Adani portfolio of companies, we have 5 major listed companies. Sector, Adani Ports, 4 in the energy and utility space, Adani Green Energy, Adani Transmission, Adani Total Gas, and Adani Power. All of these companies came out of Adani Enterprise over the last 25 years or so. Further, alongside of this core infra and utility portfolio, next please, we have our primary industry vertical. In this vertical, we have one listed company, which is our cement business, which we recently acquired from Holcim, Ambuja and ACC. We have an emerging business in B2C, of which currently independent listing entities we don't have. Within Adani Enterprise, which is our incubator, as with everything else in our core portfolio, the major incubating assets, slow down Sandesh, major incubating assets are part of our infrastructure and utility core portfolio. In the energy and utility space, we have Adani New Industries, which is our green hydrogen business, Adani Data Center business, which is a joint venture with EdgeConneX. Both of these companies today are operating and have on their operating elements have operating positive cash flow. For example, in Adani New Industries, our first modular development, which was an integrated manufacturing giga facility in Mundra, is up and running and is cash flow positive. In the data center business, our Chennai data center is now operating, and Walmart/Flipkart is the client there. In the transport and logistics space, we have Adani Airports, which is centered around Mumbai as the hub and 6 other regional airports, plus under development airport and Navi Mumbai. The airport business itself is already cash flow positive and has significant potential as it develops further, as our network of airports develop further. Adani Roads is second incubating asset within Adani Enterprise. This is already a cash flow positive business, a significant portfolio of both HAM and BOT projects. In the primary industry vertical, we have our metals, materials, and mining services business. In the B2C sector, we have Adani Wilmar and Adani Digital Labs, which is our digital infrastructure and digital development business, under which our services super app is being developed. This is broadly the Adani Enterprise story and Adani Enterprise incubating assets. Adani portfolio overall has been a multi-decade story centered around core infra and utility. Next, please. We take extreme pride in the fact that if you are a shareholder of Adani Enterprise in 1994 and held on to your shares, you would have made a CAGR of 37% over the last 27 odd years. At the same time, Indian stock market index has given a return of 10%. I think return is one element. The important element here, which a lot of time is missed, is that the assets that came out of Adani Enterprise, Adani Ports, Adani Transmission, Adani Total Gas, Adani Renewables, all of these assets, Adani Ports, over 1 billion EBITDA, Adani Renewables, almost 1 billion EBITDA, Adani Transmission, approaching 1 billion EBITDA, Adani Power, nearly 1 billion EBITDA, and our emerging businesses, Adani Gas and Wilmar, nearly 300 million EBITDA. So we not only produced high value businesses, but Adani Enterprise also incubated high cash flow and high quality businesses. Furthermore, if you look at the as government of India, Adani Total Gas, soon it will become public, but we are very confident that it will also be similar to Government of India's credit quality. So Adani Enterprise not only incubates high value businesses, but it also incubates high cash flow and high credit quality businesses at the same time. Further, it also gives me great pride to say today that our ESG rated companies in the world, Adani Ports is top 3%. In the transport logistics sector, in all emerging markets in the world, it's the #1 governed company. Adani Transmission, top 3%. Adani Transmission, one of the highest rated transparent company in terms of its disclosures. Adani Renewable Business, #1 rated by Sustainalytics in its peers globally. So what you see here on this page are companies that from a governance point of view are rated one of the best a brief look I gave in the first slide, but just to highlight in a little bit more detail, Adani New Industries in digital space, data center. We have an emerging business which will take some time in Adani Water, but we believe that water business would again be one of the major businesses going forward. Airports and roads, already one of the largest platforms in the country. Our food FMCG business, already largest by revenue in the country. And Adani Digital, which we are very excited assets in digital infrastructure in the country. And our primary industry vertical, one of the strongest primary industry verticals in the country, successful large trading business within it, successful large, one of the largest mining services business in the country, small commercial mining, but profitable commercial mining business, and emerging metals and materials business, which are will be a testament to India's circular economy and in relation to utilization of green power, one of the unique opportunities that exist for India to produce sustainable metals and materials businesses. So from that point of view, Adani Enterprise portfolio is poised for high value, high growth, high cash flow, high credit quality, and high governed businesses. And the governance comes from Adani Enterprise itself. If you go to the next slide, please. Adani Enterprise itself, out of the world 135 peers that it has, Enterprise itself is highly rated in relation to its governance and ESG principles. And this has been continuing work by the team for the last 3 years to reach this stage. And this will be reflected naturally in all of the incubating businesses as well as they emerge. We expect them to be like our ESG and governance parameters. I will stop here and I will answer questions. And if you have any questions, please do so. Thank you.
Hi, Rishabh here from Informist Media. So I have a question as to you have said you'll be investing 108 billion for expansion of hydrogen, 41 billion rupees to repay debt. Can you expand on what the other 50 billion rupees will be used for? Thank you.
Clear. Can someone please repeat that question for me?
Yeah, hi. So I was asking, out of the 200 billion rupees that you're raising, 108 billion rupees is marked for hydrogen expansion of the business. 41 around 41 is to repay debt, and the 50 billion rupees, the remaining 50 billion. Can you expand a bit on how the 50 billion rupees will be utilized? Thank you.
No, I think your question is on the so if I understand your question, you're asking a question in relation to the general corporate purposes, the amount allocated.
Yes.
Yeah, well, that's for general corporate purposes. That's the allocation for it. So it's various steps we need to take in relation to organizational development, preparation of business excellence, integration with our back office and support structure for all the business. So there, preparation, for example, development and preparation of policy structures, board preparation of various businesses. And so there's a series of steps that are required for organizational development for the incubating assets, which, as you see, the number well over 6 now, plus continuing development of the digital infrastructure in relation to integrating various hard infrastructure assets into our digital platform and all the work that goes into that in to corporate. That is what concerns.
Hi, sir. This is Ankur Mishra from ET Now. My question is in continuation of what was asked on the businesses where you will be deploying the capex towards the airport, road, and infra. In the past, we have seen that those companies have been hived out or listed as part of your plan. Is there any consideration in the future that you are going to consider the same for airport as well as green and these companies, subsidiaries where you are deploying your capex?
Issues. Can somebody from the stage repeat the question for me, please, so I can hear it properly?
Businesses like transmission and Adani Green and Adani Total Gas. So the question is, do we have any consideration that in the future we are going to hive out businesses like green hydrogen, airports, etc.?
No, that's what the incubator is. Incubator will not keep the businesses in itself. So as we have done in the past, once the business meets certain tests, broadly, I can share with you, there are 3 key tests. Those 3 key tests are execute on its business plan. Number 2, its capital structure is stable. And number 3, it has the organizational capability on 2 key areas, which are central to the group's philosophy. And the philosophy of that is that the business has the capability to execute the projects it undertakes and can operate its assets in the world-class manner.
Hello. Robbie, sir, you need to reiterate your point number
Business
1 because we
possibly
lost
becomes
the link.
available for demerger.
So is the response clear to everyone? Okay, so I'll just repeat what Robbie said, that as a part of AEL's incubator story, this is what we have been doing over the past, and we have seen successful businesses like Adani Green, Adani Transmission, Adani Total Gas, and this is what we will continue to do. The businesses will be hived off at a time when they are matured to a stage that they can sustain themselves, both in terms of financing requirement and capital management, but also in terms of management capability and organizational development. And these are also in line with what the culture of the organization and the group has been. And we expect that over the next few years, we will be incubating these businesses, and then once they are on their own 2 feet, they will be demerged out. From a shareholder perspective, they get dollar for dollar shares in these businesses. So today, if you're investing into Adani Enterprises, you are getting that many shares in these businesses also. And eventually, when they hive off, you have the ability to individually continue to own these businesses.
Mike over here, please.
I have a question on the water business. This is the first time I heard, Adani Group is getting to water or something like that. Can you just give some more clarity on that?
So Robbie, the question in the room is, this is the first time that Adani Group is getting into the water business, so they want to get clarity on that.
Time. Adani Enterprise is water is the core element of infrastructure, and we have been in the core infrastructure portfolio for the past 20 odd years. So it's an area for both for water treatment, water distribution, and all elements of water management. Is a big scope for private sector to participate, and we are evaluating. We have a very small water business, which we'll continue to evaluate and see how we can build and scale it. It's that sense of core infrastructure, water, energy, transport, logistics, that we remain a leading participant in those areas.
Thank you very much.
Hi, sir. Just wanted to understand in terms of your debt repayment from this issue, about 4,000 crores is what you've said. Can we understand why particularly you're repaying the ICDs? The alternative is you'd prepay some of your term loans, and that would free up your balances with lenders. Can we just understand the rationale for repaying the ICDs? Because at least with the airports company, you have about a 10-year, 2028 is when the loan is due.
Sorry, Anupam, can you please repeat?
Robbie, the question is that in the objects of the issue, they see 4,000 crores as the debt repayment, and they have a question.
I'm really sorry, Anupam, you were breaking up. Please, can you repeat the question again? The sound's really poor.
Yeah, sure. So the question is, in the objects of the issue, around 4,000 crores has been shown as the debt repayment, and there is also debt repayment of intercorporate deposits. So the question is, why are you repaying intercorporate deposits and not repaying term debt at the individual SPV businesses like airports, etc.? And so that was broadly the question.
I think please don't take it the wrong way. I think that question comes from the fact that there is, we obviously have not been able to explain what incubator means properly. See, incubating businesses need to develop its capital structure based on its capacity to incubate new businesses. It is not the object of the incubating entities to alter or manage the capital structure of the already operating businesses, until or unless it becomes absolutely necessary. So the airport business itself is already highly rated, and structure is already rated by 3, 4, 5 rating agencies. Therefore, it is not, we don't want to intervene in a business to disturb its capital structure. What we need to do is to build capacity for Adani Enterprise to create, develop, and enhance the ability to incubate highly successful new businesses. So I think we have to be very, very clear that this is not a question of corporate action like a typical corporate, that every action is related to balance sheet. No, this action is related to creating value and growth and businesses that are sustainable in the long term for their own value creation. So please don't confuse the two issues which are related to the capital structure of individual businesses developed on the basis of the risk of that individual business, not on what Adani Enterprise does. So for example, airports capital structure, roads capital structure is developed, which we have, and Anupam's team is always is involved in those things, along with the CEOs and CFOs of the relevant business, which we call the capital management plan. So that is a specific risk-based capital planning for that individual business. This exercise is not an exercise for those businesses. This is an exercise for Adani Enterprise. And therefore, focus is on building capacity for Adani Enterprise to continue to do what it has done in the past 20 years. That is to create value and growth. Thank you.
Mr. Singh, Anurag Joshi from ET Now. Could you elaborate on the Adani Group's ambition and its goals on telecom?
We have no goal, no ambition in telecom.
I'm sorry, you have no goal?
We have a lot of ambition in digital space, data, services for 400 million people broadly that use our services. But specifically for telecom, we have no such no plan. We don't have any specific interest in telecoms.
Hi, sir. Ankur Mishra once again from ET Now. I wanted to know, was there any consideration of different other type of issues as well, rights issue? Why did you went for FPO?
Very simple, two-part answer. One, we wanted to expand the shareholder register. Right issue does not expand the shareholder register. This will bring in new shareholders. And although there are ways to do that in the rights issue as well, but nevertheless, this is clean way to bring in new shareholders. Second, which is a very important element, this allows us to further increase the participation of average normal Indian mom and dad as shareholders in Adani Enterprise. It is very, very important for us that Indian public is able to participate in the wealth creation story. And they become part of the wealth that is being created in the country. And one way to do that is to encourage participation in the equity markets. And we believe that it is one of the overarching goal of our founder. And it's very important for him that the ability to create wealth reaches the remotest corner of India. And therefore, our objective to reach to as many as retail investors as possible in more than what we already have. And that's why we went down the route of the FPO. For these two reasons, expand the shareholder register and encourage and support and as much as we can, participation by people from the remotest corners of India, so that they have become participant in the wealth story of India.
Hi, I'm Sami from Business Standard. I want to understand what are the considerations gone into raising 10,000 crore now, and what will be the considerations when it comes to deciding the subsequent tranches, and if you can give a timeline as to when the call will be exercised.
The consideration generally is on the basis of just the overall what we term as capital plan for Adani Enterprises itself, and whilst no need to raise capital debt is not immediately required, so it's over a period of time. And the other thing we also wanted to do was to give good, as I mentioned in my earlier answer, is to provide confirmed price to the investors. Obviously, there is market movements, subject to market movements, a good runway to investors over the next 12 months. As these businesses mature, we believe that the maturity of these businesses and subsequent disclosures that will occur over the next 12 months will be net positive. And that's why we thought that this would be the best way to ensure that the retail investors and investors generally who come into this issue do not have an obligation that we actually, because our capital management plan does not require us to have all of this capital straight away, that we can phase it out over the next 12 months. But the timeline of it would be specific issue of the board of Adani Enterprise, but it would be over the next 12 months.
Given the market volatility, do you think raising 20,000 crore in one shot would have been a challenge, or was demand not an issue?
See, market volatility is we are, see, Adani Enterprise is already 27, 28-year-old company. We'll be there for another 30 years. You know, we can't make decisions on short-term market volatility for long-term capital gestation projects and incubation. So it's very, very important to understand we are not trying to maximize or trying to optimize at each market situation with the capital. We have even in the past, since 2015-16, we've raised capital based on the requirements of the businesses. Because over the longer term, all these this volatility trend for India, given that India grows at 6.5%, 7%, is upwards only. So we are inherently optimistic about the future of India. So in the longer term, this volatility aspect doesn't mean much. In the short term, yes. But as a long-term shareholders of the company, as ourselves owning close to 70% of the company post this issue, we are comfortable that and we don't plan on the basis of quarterly or weekly or monthly or even 12-month volatility. Aim always is long-term value creation on a sustainable basis. It's not a
So this is Arvind Gupta from Money Times. Your group has grown beautifully mostly by debt funds. Now you're trying to correct your leverage. Is there a benchmark that you've sent in the entire group?
Anupam, sorry, could you please repeat from the stage?
Your group has grown mostly by debt, and now you're taking corrective action to reduce the leverage. Is there a benchmark figure that you've fixed now here onwards?
I think with due respect, your premise itself is wrong. As I mentioned in my opening second slide, our portfolio companies are rated credit-wise same as Government of India. You can just imagine your question in a slightly different context, please. If you think we need to take corrective debt action, we are the highest rated portfolio in the country today. Can you imagine the state of affairs at other companies? So I think the premise itself is faulty. Although I can understand news flow, but from a credit point of view, your premise of your question itself is incorrect. So the short answer now to your question, no. This is purely an action to facilitate the emergence of the next infra and energy companies from Adani Enterprise. It is nothing more than this aspect, and the issue structure is based on, as I mentioned in response to an earlier question, expansion of share register, and participation of the retail investors in the growth and value creation story of India.
This is related to the entire group because I saw a video of the interview with Mr. Adani when he said that yes, now we will be raising equity and be whatever we will be taking action. It was in relation to that. I may have missed your slide because I came late.
No, I think I don't want to debate with you here, but we can answer that in a different setting. This is Adani Enterprise. Even the group level, I think you misunderstood what Mr. Adani. This exact thing we are doing today was well flagged as part of our capital planning program in 2015-16. See, now we have been doing this since 2015-16. Today we are doing public market.
Okay.
Before this, we did strategic investment. Last year, April, IHC invested $2 billion in the group as primary in Adani Transmission, Adani Green, and Adani Enterprise. Last year in May. Before that, Total invested in Adani Total Gas, Adani Green, terminals business, and we signed an MOU for the hydrogen business. Okay. Before that, QIA invested in Adani Transmission and Distribution. We have been doing this for a long time. It is just that, and that's what we're doing this with Varsha team and Aman, everybody, and ad factors now. We just have to make sure that since 2016, we were not able to disseminate the information properly. We acknowledge our mistake, and we are now making sure that this information is disseminated. The capital planning is now nearly an 8-year-old story. Equity raising is nearly a 3-4-year-old story. And this is just the step in that direction to complete our first 10-year plan that we laid out in 2015-16, that we will do these things and complete a Adani Group's capital management planning exercise consistent with its underlying development, origination, and operation requirements by 2025. It's nothing new. It's been written down, flagged, presented, obviously not in media setting, clearly because you at least you have clearly missed it out, and therefore we are doing it now, and hopefully that next time this question will not be there.
Okay, thank you.
Sir, Piyush from PTI. Just wanted to check if there are any planned acquisitions from this fundraise that you're doing apart from the allocation to the subsidiaries. And if yes, in what sectors? You just acquired a media company, so if you can throw some light there.
No, I think I would, if we had anything that would be part of the objects clause. Objects clause is a comprehensive use of proceeds statement, and beyond that, there is nothing that we have in mind. Otherwise, it would be disclosed fully.
Sir, we saw that despite the largest FPO issue, the shares are a bit down 3-4% today. So what's actually the market taking from this, and when will you be doing your next fundraise, like after this 20,000 crore? When could we expect you to come back to market? Thank you.
No, I think the share price, I think the question on volatility was there before. We cannot fundamentally decide long-term investment planning on gyrations in share price on a daily basis. So it is okay that those things are something that as a leadership team we take into account, but that does not inform our fundamental business decisions, because you have to still remember, even after this issue, Adani family and our strategic investors who will also long term, they will still have close to 77-78% of the shares in Adani Enterprise. So we are long-term shareholders, So for us, this short-term issue is not the point. We do not have specific further plans in relation to AEL beyond this from a public point of view. So this is a good opportunity for new investor to participate in the value creation story of AEL.
Arijit from Economic Times. I had a question in terms of Adani Enterprises is the holding company of the group. It is also the incubator for businesses which are largely capex heavy in terms of infrastructure, utilities, etc. Now, at a time when ESG is becoming more and more not just vogue, but a very critical factor for investors, equity investors especially, do you feel the overhang that Adani Enterprises has vis-a-vis coal could be a issue with, when you talk about attracting marquee institutional investors from around the world? And isn't it time to perhaps hive it off into a separate listed or private company?
I think first thing, let me just correct one aspect to this. Adani Enterprise is not the holding company of the group. It is just the incubator. It is itself a listed company. It does not hold any one of our other listed companies, other than its shares, which will obviously also demerge over a period of time once it completes its process. So I just want to make sure that you are crystal clear that we do not have a holding company structure. There is no balance sheet that holds up. There is it's a portfolio of companies which we are large share. Adani family is large shareholder of each of those companies, but there is no holding company. Now, in relation to Adani Enterprise incubation, capex, heavy companies, we are an Indian infrastructure platform. Our first and foremost obligation remains to India. India does not have a foreseeable pathway out from basic energy in which coal will play some. We cannot be derelict to the duty of our home market. Now, if some investors feel that they are unable to, for their ESG concerns, unable to invest in Adani Enterprise, we accept that position. But no investor should expect us to abandon the fundamental requirements of our own society. We can only be as good as India is. This is our home. And if there is a viable path out of intensity of developing renewable assets, we are one of the largest investors globally as corporate, as from family point of view, in renewables. We have India's largest company. We have one of the largest solar developers in the world. Our transmission distribution company is investing in evacuation of green power and supplying green power to Mumbai. So, for example, Mumbai will go from 3% to 70% green power by 2030. Our companies are already rated high on ESG. They're top 3% in the world. Adani Enterprise itself is rated 7 out of 135. Yes, we'd like to be number one in everything in the world, and we would like to get there. But we are already rated very highly in the ESG space. So even then, we understand there will be investors who have a specific mandate, and we might not be suitable for them. To them, with folded hand, we say apologies, but our obligation remains to our society, our people, because this is where we create our wealth.
Sir, hi.
And for that, we do not make apologies.
Sir, hi. This is Palak Shah from the Hindu Business Line newspaper. We have seen you talking and Mr. Adani talking about the Adani Group. Now, India is a company which is marred by bureaucratic red tape, interference of the courts, and several things. And here we are hearing that how you're praising your own company about the growth, the fast pace of growth. The pace of growth has been so fast and so stupendous that even the shareholders have missed the entire rally of entire Adani Group companies. So I just wanted to ask you, what do you attribute this fast pace of growth to? It is the aura of Mr. Adani, or how do you take this? I mean, what do you attribute it to? What is the secret?
See, one is naturally the last part of your question. We are very, very grateful and fortunate to have someone of the part of being first generation founder led group and his capacity to lead and nurture this growth. But I think the the challenge of India, I'll give you a slightly different perspective, please. Whilst I do not contest the element of your question, but let's say the CERC, which is the Central Electricity Regulatory Commission of India. We have Adani Power, Adani Transmission, Adani Energy, which deal with CERC. That regulator is considered equivalent to the regulators in China in its regulatory weighting and stability. So I think it's not correct to say that India as a whole is infused with red tape and bureaucratic structures. Our election commission is considered one of the world's best election commissions. Similarly, our election regulator is considered top-notch. Reserve Bank is considered top-notch, stable, consistent. Now, we as business want things, and we as business want to have policy settings. That is different. But I think we should not beat ourselves so much that we should take a narrative that is forced on us by people looking from outside. I think we should be proud of the fact that there is wonderful, great institutional strength that our country has. And that optimism that I'm reflecting today is reflected in me because of the inherent optimism of our founder. So our group represents this optimism. Secondly, in relation to your question of growth, we've been outlining this at least since I've been with the group, since 2012, 2013, 14, that the group is poised for this level of growth. We are investing, we have always laid out our plans very clearly, explicitly. Our shareholders and strategic investors have not missed it. Some of the mutual fund industry in India has missed this. We understand that, and we will progressively, make sure that they understand it clearly as to what we are doing. I admit our mistake. We should reach out more often. But the India's fundamental growth means, and the infrastructure means, that we are in a place where this growth will continue, and it's not actually too fast anyways. Because infrastructure, you have to imagine infrastructure is as follows: assets meeting consumer.
Sir, would you like to?
So if the assets are priced to be used by the consumer, India's growth will be high. Nobody sitting in this room today and in other cities, all of us pay our electricity bills, all of us pay tolls, all of us pay any other charges. You go to the airport, we as a society, Indian consumer is one of the most valuable consumer in the world. So infrastructure is nothing but assets meeting the consumer. So therefore the growth has been fast, because the Indian consumer, their growth, their development has been fast.
Sir, we are running out of time, but I need to take some questions from the outstation that equals to the cities where we have our media friends sitting. One of the question is, what will be the debt to equity ratio after the FPO? This is from Bhargav, who works at Sandesh newspaper.
So see, I'm glad that these questions are being asked in one way, and I'm also a little bit concerned about we can communicate better. As a primary developer of infrastructure, debt and equity is not a matrix that is a relevant matrix. For us, the way we look at is as a core infra platform. Important thing for us is assets that earn return. So basically, what is the debt to EBITDA ratio of the companies? As an incubator, broadly speaking, as Adani Enterprises on a standalone basis, we'll always have very little. Today also on a standalone Adani Enterprise, not individual companies within Adani Enterprise. Adani Enterprise itself, debt to EBITDA is less than 1. So it will only have a small amount of debt just to manage working capital, just to manage gaps sometimes. Beyond that, as an incubator, we would have very little debt. That is Adani Enterprise. Airports have debt, data center will have debt, roads will have debt. But mining services business will have debt, but that is debt on those entities because they have their own capital management plan that we are incubating. So there's no target debt to equity ratio. It is each business determines on the risk basis as to what is an acceptable debt to EBITDA ratios for those companies. For example, Adani Wilmar, long-term debt to EBITDA is 0 because it's a consumer business, consumer acquisition, distribution channel costs. So there's no need to have debt in those businesses. Similarly, airports will have close to 4.5 times till they develop, and then it will come down to 3.5. So there's no specific target that we allocate. We always get the basis of the underlying risk. And that is, and from a credit point of view, you would like to address what is the nature of the debt capital a business can support solely on the basis of its ability to earn cash, not equity. We can put equity, but if it doesn't earn cash, eventually it cannot have debt. So the debt part of the capital structure is determined purely and strictly on the ability of the businesses to earn cash. So no specific targets, but it's risk-based business structure. So from 0% in Adani Wilmar to say 4.1% in Adani Transmission, but they are all set up in the way to address their own specific business cases.
Sir, the next question is from Niyati Parekh, Times of India, Ahmedabad. What are some of the more immediate plans when it comes to the water business?
I understand the question as what's the immediate plans for water?
That's correct, water business.
Okay. No, the immediate plan is to get proper understanding of the landscape of that business of water and how best we can participate, where we can participate, which would be the best for private sector to participate, number one. What is best for government to do, so the government continues to do. So it's just trying to understand the modality, what kind of regulatory structure would work best. So to see where we can participate. So in a small way, best way to do that is to learn. At the moment, there's no specific immediate plans. The immediate plan is to continue the learning and evaluation exercise.
Sir, the next question is from Rahul Oberoi from Business Today magazine. The question is, the last decade turned out to be a transformational one for in terms of new listings and profits, etc. Do you think the growth will be faster in the next decade? Do you have any projections?
I don't have projections. I have two things I can answer. Our founder, me, who's in charge of investment and finance across the group as well, plus being CFO of Adani Enterprise, we believe strongly that India's best 20 years are ahead of it. So, a core of companies, we believe that what you have seen up to today is mere development of a foundation. The best years for India and consequently for us are ahead of us. What I can say.
Sir, last few questions. This is from Sunil Raghu from Ahmedabad, from Informist. His question is, which incubatees from your portfolio companies would like first, as per your tests that you have mentioned, the parameters, and by when will it happen as per your 10-year plan?
10-year plan, I think we are about 1 year ahead of it, so hopefully we'll finish it 2024 instead of 2025, 26. But we put in place in 2015. So target was to get everything ready. That's the question. I mean, the question on incubating assets and who goes first, I do not have a crystal ball to say that. All I can confirm to you is that somewhere between 2026 to 2029, all of them will be ready. Now, the individual decisions that have to be made will be made by Adani's board, Adani Enterprise board. And but broadly in that time frame, the major entities would be ready.
Last two questions, please, from the audience here in Mumbai.
For taking my question, Yatin from CNBC Awaz. I just had two questions. That you had an term sheet signed with Total Energies for your green business. I suppose they had valued the company and transaction is yet not complete. So by when do you see that money coming in, and approximately how much money from that? Secondly, everybody knows that the shares of Adani Enterprises have moved significantly in the last 2-3 years. But typically, when the company Adani Enterprises had its subsidiary listed, be it Mundra Port or be it Adani Power, was it not possible for you to take a IPO route or maybe a private equity investments in your airport business, something like you did with your green hydrogen or clean business, and your solar business? Because typically Adani Enterprises has been incubating businesses, but they have always got their IPOs for the subsidiaries. So why the Adani Enterprise FPO route chosen?
I think there's a sport. I can't publicly, but assumptions are the mother of all something or the other. See, your two questions are so many assumptions. I don't know where to start. The first part that you highlight. See, as an incubator, our job is to hand over the incubating entities once they achieve the basic tests as I laid out earlier, to the shareholders of Adani Enterprise. They deserve to have those companies. So that's why no IPO. Because that's why demerger. Okay. So we need to be those. Secondly, second part of your question, first, which you asked first, was that we signed an MOU with Total. I don't know how you interpret that MOU as a term sheet. There was an MOU. It is signed. As partner with their minority, probably anywhere in the world, I don't know, but we are their large partners. We were with them 2 days ago. But discussions on how we complete what is a shareholder level of Adani New Industries. That work is ongoing, and the Adani New Industries itself doesn't need cash today. It's already doing its development, and it's continuing to do its development. That will be determined by Adani New Industries leadership team as to when they want to draw down on various facilities, be it equity, but there is no your question to say, or it has not been completed, or that is actually
My question was that by when do you expect some equity from that? Because I made out from the release that you are supposed
to be determined. That is no expectation that I have or Adani Enterprises. That is, as I mentioned, sir, that the Adani New Industries CEO and the CFO and the team will determine when they draw down the cash, in what form. So that timeline is determined by the relevant entity. We, of course, we work with them all the time. We don't put a date that you sign, you need Adani as a portfolio. We do not enter into a transaction. I'll clarify again for all present. We do not enter into a transaction because we need cash. None of our strategic relationship is based on cash. It is based on value a strategic partner brings to the table. We do not need any cash from anybody for executing our growth plan. at a portfolio level. Cash. And so therefore, it's not a cash question for us. Total brings many values: engineering due diligence, engineering validation, marketing capability, their experience on large projects. That is more important to us. Cash we don't need. So but because they are partners, they expressed a desire to invest. We said, okay, now the fine determination and the requirement that we will consult together with Adani New team, our and we'll figure out. We are well on track in relation to finalizing that relevant.
Ma'am, if you can just wait, and then you, yeah.
Hi, control. I have a follow-up question on the ESG question raised earlier. You obviously are fairly okay with investors making a choice, but are you also comfortable and confident that you will be able to find funding both from banks and financial institutions, despite your exposure to coal and other hard-to-abate sectors, not just for the next 3 to 5 years, but 8 or so?
Sorry, Anupam, could you repeat that question for me, please? In the the question breaks up.
Yeah, Robbie, I think the question is a follow-up to the question earlier on ESG. The question is that while you have mentioned investors are fine with the ESG scores, Adani Enterprises in the short term for the next 3 to 4 more so 10 years.
Well, the short answer to that question is yes, and the reason is as follows. And let me and clarify and what. So we are in the if Norway continues to invest in oil and gas, oil and gas. Norway is not stopped oil and gas production. Okay, so because please understand, we will transition, and transition is reflected in where our investment is. So today, if you look at it, as we published a year or so back, nearly 85% of our new investments is in transition energy space: green energy, green hydrogen, transmission infrastructure, transport logistics, greening. Recently, we announced that our mining services business will have hydrogen fuel trucks with Ballard and Ashok Leyland. So that's that. So investors understand this. Investors, banks, everybody, policymakers. It's a transition. Nobody is saying abandon. Because if we abandon today, then Europe will have to shut down. Their basic economy is dependent on fossil fuels, gas. So please understand. Please, I just want to clarify. We are fully committed to energy transition. By our actions, we can reflect. Adani Transmission, for example, is committed to net zero by 2050. Adani Ports is committed to carbon neutrality by 2025. The distribution business in Mumbai is committed to 70% renewable power by 2030. 30% is already achieved in 2023. We are fully, everybody understands and acknowledges. And which is your question is that somebody, if we have to transition, we cannot just say, okay, today I'm clean.
Yeah. FPO sold at a 8.9 to 13.5% discount to yesterday's close, and we've seen that the shares have rallied quite a bit last year, right? So is this good discount good enough to attract investors?
See, as a holder, Krishna, we are India's best incubator. So logically, we should be attracting a premium. But sometimes, even Gucci and LMVH have to give, they do give discount to make sure people participate. So our objective is the retail participation. In all seriousness, we don't a rally for outsider is a rally. For us, it's simply reflection on the value of underlying businesses and the underlying businesses. They have market has participated and market's done what it's done. But for us, the core objective, Krishna, we are Adani New Industries, Adani Data Center, Adani Roads, material centers business. Our objective quality businesses, not, and the issue is the fact that we want to encourage the wider participation on the convention basis in the market for retail investors. So we don't have to into this in the relationship of discount versus attraction of the investors. We only ever go into a transaction of this nature once we have know the level of demand for something. And we are confident that even if there was no discount, the demand was there.
That Mr. Ratnadeep Acharya has remarks.
On behalf of the enterprises, SBI Capital